Okay guys, this week is obviously option expiry week. Now people are very aware of this, and it's something that you see talked about constantly on Twitter, all around the kind of trading universe, discussion around option expiry and what has typically happened. Now, I'm sure there are many variety of complex arguments and reasons for the actual option side of the move, but what I often try and think about, and this is discussions that go on around the Axia trading floor, of having different scenarios to the play. Now, the common play has been essentially option expiry week, buy the dip. Now, the actual day of buying the dip, maybe the Friday of the option expiry, it may come on the Monday. But essentially, people are looking to buy the dip. And this was the theme of much of last year. This is all the move up from last year. Last year was a very solid, strong move up. But every time you got these dips, which often coincided with option expiry, this is where people were then buying that and playing the move up. Last year, it worked great. Last year, we had inflation rising, seen as a good thing because the economy was improving. You had general unlocking of an economy as well. Everything was looking good last year, and the equities flew towards the upside. Now, as a way of trading this, the dip comes, people play the move back up, and that's worked. So what this does is it increases awareness of a certain type of trade. It doesn't mean that it won't happen, and absolutely the dip buy could come and the market could rotate back up. But what you need to be really aware of as a trader is the possibility of something different happening. If you focus absolutely on this one pattern that has worked with reasonable consistency, then you don't open your eyes up to the other side. The more people that become aware of an idea, the more people that trade it, and this essentially adds fuel to the fire. If everybody thinks that this is a repeat of any of these from last year, and this is a chance to buy the dip, they might be right. But if they're wrong, and if the market does not bounce, there's a lot more people who are now long and trapped. Meaning that the alternative scenario is that we can continue towards the downside. And this could take on an extra leg down, particularly as we are in a different environment. The S&P from this year, from the end of last year up here, has pretty much gone straight down. Doesn't mean it has to continue, but you have to always be thinking in terms of scenarios. How could this work differently? So if you are assuming that this is a dip buy, that's absolutely fine, and it could well be. But don't blindside yourself to the possibility that this one is not the dip, and if it does start to go towards the downside, it could be something completely different. And I know that that doesn't give a strategy or a method to do something, but that's the entirety of trading. It's about hypotheses and balancing one against the other, asking yourself, talking to the other traders on the floor, talking to the other traders on our Discord group, things like that. And that discussion which opens your eyes to alternative opportunities. That way, if markets do continue to the downside, at least you're not surprised by it, and at least you're not the one caught buying the dip that is not a dip. We'll see what happens. We'll perhaps come back and I'll do another YouTube on what did happen, whether this was just like it did previously, or whether we got the alternative on this. But it's a discussion that's constantly going on around our trading floor. It's a discussion among most traders of how does this play come out? What are the different options? As long as you've got all the potential ideas and you can see those options, you're able to trade it. That's what you spend a lot of time doing. A lot of the discussion on the floor is all about that type of thing. So make sure that you've considered all your options. Trade it however you want. It may go up, it may go down. Just be aware of what it could do.